Welcome back to Trade 360. Time now for the big three. I'm Diane King Hall. We've got three charts, three trades for you. Ben Watson will take us through the charts. And here to take us through the trades is Charles Moon, Senior Market Strategist at Equities, Prosper Trading Academy. It is good to be with both of you. Ben, always love chatting with you. Even better when you're in person. Charles, I'm going to start with you, though. Let's talk about the first trade on your list. You've got Amazon on your list. It's been an underperformer compared to a chunk of the Mag 7, not the entire Mag 7. It's not the weakest performer in there. Stock is higher today. What's your view on this?
Yeah, it's pretty unbelievable that we are, making new all-time highs in the NASDAQ, new all-time highs in the S&P 500, and it's really not being driven by names like Amazon and Apple. But Amazon is starting to show some signs of life. They've met a lot of resistance right around this 218, 219 range. They gapped above this level and they're holding that level today. So, that's really in terms of short term, a very bullish sign when previous resistance becomes immediate support. So if they're actually able to hold this level, I think the stock could get pretty frothy. I think the upside target is 228. Now, the only concern I have is that we're going to be going into one of the slowest trading weeks out of the calendar year. So I'm not sure if that actual momentum can actually be facilitated next week. But, if we continue to stack in this market, we continue to rise like the NASDAQ has, and now the S&P could actually start hitting those higher highs on a daily basis, that could be enough to drive Amazon up to 228. The positive tariff news is only going to be a boost for Amazon here, and I think the markets are kind of starting to price that in, and it's about time that this stock starts to join the rest of, the markets and really start pushing towards its 52-week highs.
So, Ben, Charles, some of the things that stand out to me is the point that he makes that Amazon showing signs of life. He's really paying attention, obviously, to this 218, 219 level here. And, seeing that as a bullish sign, but what does the chart show you?
Well, Diane, this is a chart that, much like many of the other stocks in the tech sector, has seen that reversal off of the April lows, but it's run into resistance levels, and that's kind of been the theme of the last few days, is testing and breaking out through those levels. We get that breakout today of the 216 kind of objective resistance level that was support back into the January timeframe. But it comes with a little bit of a cost, right? We get a gap up into almost a shooting star type of candle, a little bit of downward movement today with a little bit of negative momentum. If you look at the MACD and the RSI down in those lower panels, you see that kind of backing off a little bit. So this is maybe coasting higher on kind of this resolution of this week, digestion of tariff issues, and maybe turn to something else. But the question is, does it have enough momentum, enough oomph behind it to get back up into that 238 to 240 range where you see those previous highs in the February high off of the earnings announcement? With the current state of the momentum and sentiment, it just doesn't feel like it. That being said, again, so realistic here is momentum to the upside could carry this higher.
Okay, so momentum to the upside could carry a higher. Charles, what final thoughts do you want to leave us with when you think about, both the levels that you're paying attention to today, the 228 target you mentioned, and then also that dynamic about a sluggish week potentially next week?
Yeah, honestly, if under normal market conditions, we probably would be able to pinpoint that momentum a little bit more accurately, probably see it a little bit more. For me today, I think a lot of anticipation for the PCE and then the consumer sentiment report, kind of just put traders on hold. But once the reports came out, it's almost as if everybody is looking to cash out and start to call it an early week and start their vacation. And that's usually what happens this week, this next upcoming week, that a lot of Wall Street takes that week off. Obviously, it's a abbreviated trading week with July 4th. So, the momentum it certainly could wane. I'm not expecting the stock to be screaming up under those market conditions. If things were more optimal, that's certainly something that makes a lot of sense to me. But again, showing those signs of life, breaking free from that range, seeing this market continuing to work, it wouldn't surprise me if we have a very low volume, slow melt up next week. And again, that's just kind of one of the points that could help Amazon just slowly grind up as well. And like I said, if they're able to maintain this 218, 219 level as the new floor, it certainly brings in 228 and potentially that gap fill up nearby 238.
Okay, so the hope is that Amazon maintains this floor around where it is now and looks for 228 if there is that slow grind next week. All right, let's talk about the next one on your list. You've got another member of the Mag 7 here, Alphabet, Google. Once again, another one that has not been out at the top of the list when it comes to the group. So what's your view here?
And again, this is in relation with Amazon and Apple, just seeing how the markets have made these all-time highs under these circumstances, especially with the recent volatility in the news out of the Middle East, at some point in time, these stocks are going to participate if the market continues to rise up. And, certainly that's going to be a massive boost for the NASDAQ in particular if Amazon, Google, and Apple finally wake up out of their slumber and start making that push. Now, Google is much more of a laggard than Amazon, so my anticipation of the upside is still a little bit more limited. If they could maintain above the 200-day simple moving average, really, pinned around this 171.50 level, I actually think they're going to hold and bounce pretty nicely right to around 179, 180. That was the recent high here earlier in June, specifically on June 10th, when it hit 181 and started retracing back. So, that would be the more near-term target, but certainly getting above that level, it really pinpoints that they're going to be making that push for 190. I expect a lot of resistance at 190 because when Google made that all-time high and they gapped down, that's going to be that gap bar high that we have to watch. Once it clears that level, it's almost, it's almost a certainty that the market is getting that signal to try and push towards that gap fill. And of course, participating in that range is only going to be a very strong positive for the NASDAQ.
Okay, yeah. This obviously lines up with kind of the views that Charles has about Amazon, right? That at some point they're going to participate in the party that we're seeing within the tech sector and these gains. But he does, I think that it's fair, his approach of, kind of the caveat around Alphabet, Google. It's not as strong as Amazon and, pointing out the 200-day simple moving average. What does this chart show you about the pattern and potential for Alphabet here?
Yeah, again, much like many of the other Mag 7 names, this has been climbing this wall off of that April low, like we said about Amazon. But there's a fair amount of gravitational pull to that 200-period moving average on this chart. You see it kind of coalescing right around that 172 mark. It's at 173 and change today, coming up off of that little bit of a break of the 200. It's got a resistance level over the top here at about the 180 mark. Now, I think that's where the optimism lies, because a potential break of the 180 breaks it out of this ascending triangle that it's been building and maybe theoretically get you the 207, that previous high, back in the January timeframe, but not without some maybe resolution to the European Union regulatory overhang that they've got. And, they don't have necessarily the same retail presence that may benefit from positive tariff news that, say, for instance, the Amazon does. But, in terms of advertising sales and everything else, there is that potential. You still have a little bit of weak momentum, though, here, Diane.
Okay, so a little bit of weak momentum there. I think that makes sense with the caution, Charles, that you brought around that one. Let's talk about the final one on your list. This is a newer entrant to public markets, Voyager Technologies. It's having a difficult day today in the face of, overall risk on sentiment, but it's, already had some volatility around it. What's your thesis here, Charles?
With these recent IPOs, we've seen a few go absolutely parabolic. CRWV, CRCL. We've seen them met with just incredible retail fanfare, and Circle's obviously given back a lot of their gains today. But what really stood out to me with VOYG was the kind of build out and floor developing right around this 42, 43 price point. Now, it came up to a key technical level where it rejected yesterday, which was right around $51. And that's what I was really looking for. This is an important price to break. This has really been in the near term a very key suppression point at the 21 EMA. So for me, now that it's reverted back, this is probably going to be something to watch to see if it can still collect itself off of 42, 43. And again, it sounds funny, but if we're not going to position on a buy low opportunity, for me, that $51 price is really important for that breakout. It really leads to a lot of wide open space from a technical standpoint. I like the upshoot to somewhere around the mid 60s, like 65. And historically with IPOs, when stocks start finding a bottom, it hit this, reversal, movement to the upside. Usually once they break that initial IPO peak, that's when we could see those big runs. CRWV did something very similar when it bottomed out, broke that IPO high, and then basically doubled up in price pretty quickly. Circle broke that really, really quickly after their IPO and just launched to the atmosphere. But this is where I'm looking for something very similar in names like Chime and Voyager here. But Voyager can't have any opportunity to the upside without breaking that 51 threshold. So that's my breakout point. That's what I'm going to be watching here in the near term.
Okay. Ben, it's interesting, Charles pointing out these levels when it comes to Voyager,
right.
That floor around 42 that he's noticing. And, I wonder if that lines up with what you're noticing in patterns, and then the 51 level being important to a breakout. What do you see when it comes to this chart?
First of all, I want to say as a child of the late 60s, I love the fact that the space race is back on here domestically. Now, you take that story out of the equation and you look at this from the perspective of this being more of a traditional IPO than a SPAC, and you see really some of those common characteristics. A little bit of a push to the upside, gets a bit of selling here, even though the lockup hasn't ended. But that break above the 51 mark, I think, becomes the key to maybe escaping the gravitational pull of that grounding support around that 43 range or so. If it can break that gravitational pull and get outside that range, then I think you've got a little bit of resistance up again around the 53 mark. Beyond that, then you're approaching some of that rarefied air up about that 65 mark. And if it can start to gain some momentum, which it's doing on the MACD, it could reach that perhaps escape velocity here.
Oh my goodness. I was wondering that was subtle this time. The gravitational pull there that Charles is noticing with around 42. I love it.
Yeah.
And then maybe it will reach some parabolic levels, as you mentioned, Charles, earlier. We'll pay attention certainly to these levels on Voyager. Thanks to both of you all. Ben Watson here in person, our very own Ben Watson, and Charles Moon, Prosper Trading Academy. Great conversation, guys. Have a good weekend.